Hello traders, and welcome to today's delayed session of the Balanced Trader. I really do apologize for anyone watching or waiting for me to turn up. A little bit late today. I have been a little bit overwhelmed and had some technical issues, so I really do apologize for that. We've had I'll just quickly cut into what we need to talk about because we're very late. So we had a pretty balanced session yesterday following the holiday in the US. We we failed to take out the spike base from Friday, and we briefly broke the highs from Friday. So we are still one time framing up on the daily, but we didn't get close to taking out the overnight highs. And testing the 4,200 area where we found sellers in the over the weekend and yesterday's Monday holiday session. Going into tonight's overnight, we basically had a very balanced. We were just trading in between the value area of yesterday's full session. So when you're trading balance, you're looking for signs of a breaking out of that balance. So you want to be alert to if you have no reason to believe that there's potential for a breakout, either side, you want to be fading that area of balance and looking to take it back from the outside in. And then should you think that there's a opportunity for it to break, then you want to be taking the trade from the inside out. And today we had the open. I've not paid too much attention to it, but it was very clear that we were going to have a good chance of breaking out of that little balance we had on the overnight to test the overnight low, and then to look to target the prior day's lows, which were put in just before yesterday's Chicago PMI. I think the low was at 4,102. So today's session is well underway, so everything I say is going to be history, so I won't talk about my plan. I've already taken a small trade. I am holding a small trade. I took a trade somewhere around here in the 30s on that little pullback there. It wasn't, I wasn't particularly confident about the trade, but just seeing that impulse down, I thought I'd have a go at putting an offer on the edge of this little zipper that formed. I don't know if you can see. No one's looking at me. No one's looking at what I'm waving my hand at. Okay, so what I was saying is that the session's well underway, so whatever I say is just going to be history. My trading plan was to look for a trade out of balance. If you had a look at today's notes, I've put, this is why I'm a little bit late as well, because I was trying to do something different today. If you have a look at today's notes, you will notice that there are links that are attached. Most of them are my own work. I've had to beg, steal, borrow some links from other people. There's a link in today about trading the first of the month, because that's an important, there's some statistical probabilities in there that you need to sort of be aware of. Trading into the first of the month, end of the month, you've got flows going in and out, so always good to be aware. And what I was looking to do this morning was I was looking for a failure and breakout of balance, and for balance to be contained. So what did I see? What did I like? So basically, I think I outlined that the 4120 area was an area. It was a bit of an over/under yesterday. We had an early push in the session where we formed a high in the 50s, just below the prior. Let me have a look. Let me just check for accuracy. I think we just broke above the overnight high. We popped up above it, and then we failed to take out yesterday's highs, and then we started straight back lower, which is where I started thinking, okay, maybe this is just going to be a rotational move back lower. I had no idea that this move was going to carry on significantly lower. I just took the trade based on what I saw, and I basically got rules to try and hold the trade, which I'm thinking that it's time for me to actually get out of my residual position now. I've just missed my exit actually. I didn't want it to break above 6, which we have done. There's a little ledge here, 09010. That's got to hold. Okay, I've made a mistake, but that ledge there, that big ledge, volume ledge at 4110, that's got to hold for me. Otherwise, I'm getting out for at least a scratch. This is basically a re-entry on the trade that I took from, I think it was 29, something like that, on that pullback. But anyway, that 10 is holding. Nice little low volume area here on the profile as well. You can just about see it there, little gap there. Let me just expand it so you can see. So that's where the 10s are. So I want that to hold ideally. Otherwise, I am exiting the trade pronto for fear of a reversal. Although all the signs are now that we are going to continue back down. Remember, yes, last month's VPOC is down at 40.15, so that does tend to get covered when we are trading in balance. So let's see what happens. I've put most things in my notes. I've done them a bit rushed because I wasn't really concentrating on what I was going on about today. I was more interested in trying to create a better product for you guys. And as we are in a kind of a trial period for myself, I am basically learning as I go. And so let me just quickly explain what's different about today's journal. So what's different about today's journal? If you are watching this, let me just put myself up on the chart so you can see me. So what's different about today's journal? Today's journal has got multiple links, and what I'll be trying to do in the future is create some educational material around what's going on in real time in my debriefs for you to click and learn about trading different setups and different trading environments, more importantly. So if you see in today's session, I've added a link about how just coming off the back of the holiday session, what was expected, what happened yesterday is important to look at and reflect on these things going into your debrief. You really want to just note that this was a holiday. Yesterday was a holiday session, and what happened over that 2-3 days going into the session. Sorry, going into the holiday session, during the holiday session, and what happened over the holidays as well, because we were open. The markets are open on Monday, but obviously it's closing early, and the participation isn't there as well. So it's there's a link there to try and help you understand how to trade those markets, some of the pitfalls, some of the tips that I've got for you guys there, and then moving down, we had a reversal off the lows yesterday, which coincided with the spike base from Friday. So that was an area that was highlighted in yesterday's notes. How do you trade spike rules? Well, this is something I learned from Jim Dalton reading his books. He has something called spike rules. I implement the same kind of ideas, and so yeah, if you just click on the link, which is here, spike rules, it will go to a link where it will just outline basically how to trade spike rules. Oh, I've just lost my notes. God, I'm really not good at this. Presenting stuff. Don't put me on TV. YouTube is TV, kind of. All right. Okay, and then what else? So we've got VWAP. I've got a little link on a presentation that I did a while back. I haven't published it yet, so it's just basically about how to trade the VWAP. So yeah, just all these little things so that you can just basically try and learn as you go, or we can learn together as we go, and helps to keep you out of trouble whilst we're trading. And I will be flashing these up on the live stream as these things crop up. So if there's a Fed speaker, I will be bringing up some educational material for you guys to understand how to trade the Fed speakers, and any other kind of relevant, important information. Anything pertinent, anything I feel that is really important for the oh no, I'm streaming and missing my, right, we're above those 10s, I'm out. That's a shame. Okay, well, right, that's really bad. Okay, nonetheless, that's what I want to be doing. I want to be bringing you guys information, education, helping you to navigate these markets in real time, because I realize that there's a lot of dead time waiting, and whilst we're trading, there's just so many things that there's only so many things that we can talk about when things are busy. So it's good to sort of be aware of those things, and a lot of the times you can prepare yourself for certain market environments. So if I see those environments coming up, I'm going to flash up some cards for you guys to click on, have a look, and follow my rules. So just going back into the journal, because I think it's pretty cool, if I do say so myself. Right, so I've got a link for VWAP there. I've got a clear over and under area. What is an over under area? Here I've borrowed a link from my friends at Convergent. So if you click on it, it will flash to their website, where you will there we go. There's a definition of what is an over under and a stalk zone. So have a look at that. You know, try and educate yourselves. VWAP. I've done one there for you guys. There's my friends at Financial Juice.
Says that Russia is credit event.
Normal variation day. What is a normal variation day? Well, I've done, you know, just a little bit. I need to fill this up now, guys. So please bear with me while I fill up with content. But it's going to take me some time. But I am working as hard as I possibly can. So, you know, it's good to understand what these different day types are. What is a variation day? What is a P? What is a B? What is a double distribution? Just, you know, you got to get with lingo. So the only way you're going to do that is just by immersing yourself in these things. Read the books, read some books. Stiedemeyer, you know, Dalton. There's so many who've preached about this stuff. You've just got to go out there and learn it. And but just try to be consistent in how you apply it. That's one of the key things here. So what I'm trying to do is I'm trying to apply consistent methods. So this is an area now. We've had a low, and we look like we've formed a little base. So I'm just cutting back here. Shouldn't be doing that. Carry on what we're talking about. So, like I've just said, all these links, if your information, I'll be flashing them up in little clickable blobs on the video. I'll try and do that over the weekend. But the idea is to generate as much information for you guys that's relevant in real time. So there's no point in me talking to you about a VWAP trade setup in a seminar. That's just, you know, it's not very useful. But what would be really useful is if you can understand that that trade is coming up in real time. I took one yesterday that I traded. It was terrible. I need to actually debrief a little bit and have a look at why that VWAP trade failed. But basically, I mean, I know why it failed, but we're just trading lots of, you know, in balance. So when you're trading balance, you don't want to be trading VWAP because it's just going to slice through VWAP. VWAP's acting as the mid, you know, it's where fair value is. And when you've got balance, you know, your value is being found, and what tends to happen is it just trades around. So you're just going to get chopped up if you're trying to trade VWAP. You should be trading as VWAP as a target, as opposed to trying to trade it on a pullback. But I wasn't quite sure of that scenario as it was happening. We came from quite high up. We just made some. We just broken the previous day's highs. We pulled back to VWAP, and I saw volume increasing into VWAP. So I thought, okay, it's worth a stab. And in the end, I got stabbed. I ended up taking a loss on the trade. But, you know, that's just how things work. And I think I had a question, actually. What I didn't like about the VWAP move yesterday, the pullback from the highs into the VWAP move yesterday, it was just at the speed it was going. But what made me sort of, and I don't normally take the trade if it moves into VWAP very quickly. But what I did like was just how the volume was increasing as we got closer and closer to VWAP. And that got me into the trade. Also, there was a couple of other reasons to get into the trade. I think it was the mid. I think there was, I can't remember now. It's all a blur, getting old. But there was a couple of other reasons why I got into the trade. But yeah, I didn't feel 100% confident. But because I'm trying to be consistent in what I'm doing, what I'm applying, I am just, you know, I'm putting the trade, you know, that's a trade that I want to see. We've just broken the highs. We've pulled back inside. And I'm looking to take the trade from VWAP if it's not too aggressive, moving down there. But anyway, it didn't work out. But so what I'm trying to say here is that when I see a trade set up, I am not only going to talk to you about it in real time, but I'm also going to provide you guys with you know, some material to just go and study for 3, 4, 5. Go watch a little 5-minute stream, pick up what you want from it. This is the way I trade. You need to understand how you trade. And this is just basically trying to help you understand a little bit how I apply a consistent approach to trading on a daily basis. Nothing more than that. You know, all trades are my own ideas. You should trade your own ideas. So I just want to say that. Someone reminded me I need to keep repeating, because people might be trading and copying me. And if you are trading and copying me, the chances are you will probably not be as good at doing what I'm doing as I am doing myself, because I am thinking in real time. By time, sometimes I will forget to say something that I've spotted because I'm immersed in the trading experience. So just don't copy what I'm doing. But I think the key things you can take away from me doing this is that I am somebody who is finding their way, and who has a lot of experience, but is finding his way in trading discretionary outrights. And one of the things that has made me more consistent in this journey, almost instantaneously, is finding a very consistent rules-based approach to trading. You need to find your own rules for that. I've got my own rules, and I've actually put my rules in my notes. Trading balance at the bottom. It's got trading balance into rules, and if you click on that link there, you will quickly go to one of my Evernote pages where you will you'll be able to see some of my rules. That's just one of my rules. You know, that's just part of my rules. I've got lots of rules. Sometimes those rules are tweaked, but only minor tweaks. And if I break them, you know, I'm breaking rules. And I don't think breaking rules is a consistent way of trading. And if you are breaking rules, it's really, really hard. Even if you are profitable, if you're profitable for periods of time, it's very difficult to sort of go and understand what made you profitable and how that made you profitable. If you're not keeping stats on what you're doing, then you might as well just be throwing your money out the window, because when things do go wrong, you can't learn from them. So it's good to sort of try and keep a consistent approach, and then you can tweak it and try and make things a bit better. Obviously, your rules and my rules, they change depending on the market environment. So that's something that you guys need to...
increasingly being used to conduct ransomware.
I have to say, BOLLOX, I think I stopped out at 11s and 12s. It's the same as yesterday. I am just stopping out at every bloody high tick and low tick. Anyway, but again, you know, my rules was to trade the break, not let it get above 6. I was talking to you guys, I missed it, so that's my error, that's my fault. I take full responsibility for that. I let it get above where I wanted to get out, which was 10s. There's a big volume ledge here. I didn't want to get above there, and it did. I wanted to find some protection there. I did find protection, but it was just above it in this zipper here. So it's a perfect example of me just being inconsistent with my application of the rules. I did not want to see this pull back above 6s. I missed that. And then I broke my rule again here. Now, had I taken that trade, had I taken the exit at just above 06s, maybe 07s, because if this is a strong trend, this should eventually, a strong trend will weaken and you'll find some chop. And I think that's what we're doing now. Right, so you've got to understand how these markets work. Sometimes you get an impulse, especially from the open. The market will find its feet, will find some kind of resistance, some kind of support, or whatever it is. It'll get some chop, and then eventually it'll have another. You know, if the trend is strong, it'll have it can then carry on, and the price action will clean up again. What I mean by clean price action is just generally how these candles are formed. You see how one follows the other. You don't get spikes above the other. You don't get any horrible wicks. But then when it gets choppy, you've got this two-way action. As soon as you recognize two-way action, as soon as you get like a significant pull, for me, the bigger trend is over. This is verging on that bigger trend is over kind of a day. At the moment, it looks like we're trying to form some kind of, very heavy bottomed distribution at the bottom, doing a lot of volume down here. I've done some videos actually on these kind of profiles, which I think are really interesting to learn about. But basically, we've taken direction, and now we're finding some resistance. So we're getting into this two-way action, and eventually, one of these buyers or sellers are going to give up, and we're going to get liquidation, either higher or lower of positions that have been accumulated in that chop zone. Anyway, I've gone off tangent, but anyway, important for you guys to have your own rules. I have my own rules. My rules are adapted for different environments, and I have to say, a lot of my rules, I've had a lot of help from, being a part of a bigger community where I've learned a lot from my peers. I'm a member of a community called Convergent Trading, and at this point, this is where I think I made the turn into a more consistent trader. I wasn't terrible before I went to CT, but I'm finding what's the right word? I'm finding confidence in my behaviour and the way I'm trading. And so Why is that?
text
Well,
has
because
been
I've become very
released early
consistent
by
in the way
ECs.
I apply
And I think there
myself
was
to
a
the
sort of
markets.
confusion from our side there,
I'm slightly
putting out
more
two
statistically
tweets
driven
recently.
than
The
I
ECB's
was
Senator's
in my
latest comments,
previous
which
attempts to
are
become
quite
a
concerning,
profitable discretionary
the
trader.
introductory statement that the
But
member
you know,
of the
throughout my
executive
career
board
of
the ECB,
20
meeting the
years,
European
I've
accession countries working
I've only
group
found
of the
really
Committee on
that
Economic
I've
and Monetary
done
Affairs of the European Parliament
very
that
well
will
when I found some
correctly
proof in the
post that to
pudding
help you
through
in
numbers,
just a moment's
through
time.
a consistent
Not much notes there, just as the
application
ECB,
of
talking about Croatia meeting Eurozone
statistics
requirements.
and using those, using that to sort of give me conviction in taking the trades, which is what I'm finding now. I'm finding a bit more conviction in what I'm doing because I've got some statistics to back me up. CT have helped me with that. You know, Morad has done countless videos on how to structure your risk reward. Before, I would be all in, all out, a bit like yesterday actually. Yesterday I was a bit all in, all out. I was having 15-point moves, coming back and whapping me in the face. There was a reason why I was behaving like that yesterday, because I thought there was going to be potential for a month-end move, which was a slightly bigger time frame. I just thought I had to give my trades a bit more room. It didn't work out in the end. It was perfect balance. In fact, all the signs were there for perfect balance yesterday. You know, the two-way action, it was all there. But in my head, I had my plan that if this happens, I'm going to see it through. And I saw it through and it didn't quite work. So, you know, fair enough. I'm not gonna berate myself for that. But the signs were there that what I was expecting to, and that's why I need to put my debrief. The signs were there that my thesis, my idea wasn't quite all there. The volume wasn't quite there. There wasn't the reaction. There wasn't the pickup in volume after the PMIs yesterday. We didn't manage to hold the trend post PMIs. We did for one moment. After PMIs, we bounced back up a good few ticks, but then we came back down. We broke the lows, where we had a very passive buyer down there at 02, whatever it was. And then we just went back up again. But I basically got very, you know, not very, because I'm still developing them and I'm tweaking them, but I've got structured rules that give me some confidence to take the trades day in, day out, and one after the other. And I can take a loss, I can take two losses, I can take three losses, and I'm still confident that I can take another trade, and it's still, you know, over time I'm going to yield some results. So it's just finding consistency, and that consistency is being brought to me through the clarity that CT have provided. So I really want to, I really want to push that. I really want to say that, yeah, CT has been a big help to this turn that I hope is happening in my trading career. And this is actually one of the reasons that I want to try and, you know, create this stream so that people can understand what it takes. And if a trader like myself can struggle, and trust me, I struggled. I struggled for the whole period of learning the whole outright process, because that's just not who I was. You know, I learned to trade in a different way, successfully, and but the market conditions for the way I was trading just weren't fruitful. You know, spread trading was and systematic trading. Well, certainly spread trading side of systematic trading was less and less profitable. And I had to make a change, and I made that jump, and I'm sticking to it. I'm not going back to what I used to do, even though at the moment the volatility is incredible, and I think that some of those ideas that I used to trade are probably working very well at the moment, but I've not even looked at them because I don't want to distract myself from the path that I've taken. So a lot of talking just now, and nobody's watching, so
and just a reminder for you,
yeah, I'm not sure if the stream's working. Mic's on, yeah, good.
Speaking in EU Parliament. The text did come out early. We have posted out the introductory remarks on the financial news feed.
You can hear the squawk. Anyway, so okay, that's all I want to say. I've got no trade. I'm flat. I've had an okay morning because I took that trade from 30. I got out most of it at 90, 95. If you have a look at my daily prep, you can see that all these levels are marked out. We're not trading on a whim. I didn't get a chance to do a plan today because I was just too rushed. I'm sorry. I didn't even do a 1 minute breakdown of the price action yesterday going into today. I apologize. I will try to get back on track for tomorrow, but I am trying to build this product, so please bear with me whilst I am doing so. The objective is to create an environment where people can learn on the go, and and learn from somebody who has taught people to trade, and that's me. Um, and learn from my experiences and learn from my failings as well. That's really important too, because I've made lots of mistakes in this process, and you know, some of them weren't my fault. I take full responsibility for everything that's happened in this learning process, but it's very easy to get sucked into indicators and you know, just get rich quick schemes. Not that I fell for those things, but I'm just saying generally it's very easy to listen to other people and not to listen to yourself. And I only started becoming more consistent when I started to listen to myself and apply very strong rules that, you know, all these principles were taught to me by Morad and CT. So yeah, big shout out to them. All right, I don't know what I'm going to do now. I think I'm done for the day, to be honest. I'm actually feeling very tired. I've been working very hard and I've still got some more things to do. If anyone knows how to use WordPress and help me get my blogs up in an easy way, creating links and all that sort of stuff, I'd really appreciate it. I don't think anyone's going to reply to that call, but yeah, I am struggling a lot with the implementation of my plan. And the thing is, though, it's not as if I can ask somebody else to write my debriefs and plans. I might as well write them myself. But posting them on WordPress is an effing ball ache. All right, okay, enough talking. I'm going to leave my face because it's a pretty face. I'm going to leave it up there for you guys to keep looking at. We're just breaking through the day's lows. I'm very upset that I've stopped out, I think 11s or something, just in that little... That really looked like a nasty little, that consolidation zone. It looked like it was consolidating, but it was actually absorption. How do we know it's absorption? What's the difference between absorption and continuation? There are signs. If anyone can answer me what those signs are, maybe I will do a little snippet at some point and explain to you guys the difference between absorption and continuation. But to me that looked like continuation, but at the time, but I must have missed something. Anyway, I'll catch you in a bit, okay?
as the role of central banks will remain to supply liquidity and stability, but digital currencies could change implementation.
Hi guys, if you can see just where we are and what's been going on. So we're at a really important juncture of the trading day at the moment, because we've obviously seen this push down from the open. We are now sitting right where this unfilled gap is, and we have filled it. I think the gap high is 73s. So 73s is the unfinished auction high. So 73s is where we're looking at. We're just below this low here, I think. No, not even below that. 79s. So we're just sitting above where this little circle is here. So buyers are going to want to defend this area here. So this is something that's really important for buyers to maintain here. I think that's a bit, that's a bit of an, over and under here. So I want to be watching that area. I'm not in a position. I got taken out at 10s, 11s, whatever it was. My plan was to hold this for a high target down to 40.15 if we did the run lower, but it looks like I'm not partaking in that at the moment. I'm looking for a pullback or something of the sorts. I'm not really paying attention, to be honest. I've kind of turned myself off because I know I'm not fully here, so But I just want to make sure that you're all aware. We're looking back at our plan, and we're looking at where the big areas are. We're expecting a battle, and this is denoted by this up-down little arrow here. This can go either way. This could be a big push from this area here. So we're looking for the gap low. Well, gap low from the auction on the 27th and 26th to get filled, and that's currently where we are. We're just trading above it, and so far they've done a good old job of holding price above 79s. Let me just quickly show you. Does that mean anything in terms of footprint or volume? Not that I've been looking, but I would imagine that we have seen a bit of a pickup here. Let me have a look. Yeah, you can see that there's the push down and a significant push back. A lot of volume being done here as buyers are trying to hold, and sellers are trying to get through. So we've seen a big pickup in volume. This is where understanding where the key areas of where battles are going to take place. It makes a huge difference, because you really want to be trying trading from big area to big area. You want to be you don't want to be trading these little zigzags in the middle. You want to be taking positions on where I got out. Sigh. I'm very upset about that. Anyway, you want to be taking positions on from one big area to the next big area, and trying to be getting as close to those big areas as possible, given market conditions. So it's really important to understand where those big areas are. So if you were taking trades from the 20s, where are your high time frame targets, double O's, and then maybe this area 80s below. There's a good 20 points in there, and if you can skip through the middle bits, if your high time frame targets, normally I find my targets are, levels that I'm looking at between 10 to 30 ticks, 10 to 40 ticks. If you skip one of those, like if you see a strong trend and it basically you can bypass one of those, you're looking at 40-50 points worth of profit on a trade, if you can run it that far. But that's the idea, is you're looking for clues to make you want to hold the position through areas where you would otherwise be looking to get out. And that's why we scale as well. You can afford to take 1, 2, 3, 4 lots. As the market moves in your direction, you are scaling out of your positions, you are locking in profit, and just continuously monitoring for continuation of that trade. And if you can just keep a little residual and just keep holding it as we break through barriers, you can end up with a fantastic day just from one small trade. It's not unheard of to get 20R, 20 times your risk reward. I've done it a few times, even live on stream. So it is possible, and that's how we that's how I structure the trade. That's how I've learned to structure the trade. So yeah, it's all about continuation and monitoring, and whether or not you can just hold enough to make it worth your while. And scaling really allows you to do that, okay, in a very confident way as well. One small loss doesn't, you can afford to take multiple small losses. You just need one winner with a 30R, 20R, let's say 15R even. You can take 15 losers and get one trade right, and you can get 50-60 points in these markets, given the volatility at the moment. So don't fret about taking losses. Losing money is part of the game. You're buying a lottery ticket, you're throwing the money away. Think of it like that. You're throwing the money away. You haven't got any regrets about buying a lottery ticket. You're hoping to win. You've got better odds trading. Okay, so you're basically, every time you're taking a small loss, your risk is the price you pay for a lottery ticket. So if you're risking, I don't know, $100, and your reward is potentially 5, that's 5 to 1. I'll take those odds. You've got to get it right. You've got to get it right just the once, and you can cover 5 of your losses. So hopefully, if you understand where to get involved in, and you can structure your entry well enough, you're going to be taking a lot. You should be having a relatively high hit rate, but it doesn't have to be too high. I know traders that have got hit rates of 30%, and they're extremely profitable. It's just that when they do have those winners, they have got so much size and so much they run it for such a long way that it just eats up all the little losers they've taken for the prior 3 or 4 days. So it's all about structuring your risk reward and making sure that you can carry your trade as far as it possibly can go. And so what you want to be doing is looking for big area to big area. You want to be trading in those big areas to big areas, and that's where you want to be trying to concentrate all your efforts. All the bits in the middle, they're irrelevant. Okay. All right, I'm going to go and have a cup of tea. Okay, slowly grinding our way through to that gap. There we go, just going through it, trading 78. Gap is at 79. I think the high on the 27th